Hey, everybody. It's been a couple weeks since we heard Boston Omaha's second quarter earnings. Um, a lot's changed with the way the company reports its results. They actually issue a presentation now, the first earnings deck that the company's ever put out, to my knowledge, anyway. So we're going to go through that in just a second. Before we dive into Boston Omaha's latest and what I think of the numbers, please hit the subscribe button to my channel. I cover Boston Omaha regularly and a bunch of other stocks. So keep up with my coverage and check out the link you see on your screen, fool.com/Frankel, for the top 10 stocks to buy right now from the Motley Fool. It's the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. So, as mentioned, Boston Omaha, they released their second quarter earnings. The earnings themselves were nothing that was a giant surprise. We knew, we pretty much know what the core businesses are doing. We knew what the asset management business is being wound down. But I want to go ahead and share my screen so we can go through the presentation, because if you're a Boston Omaha investor, you're probably not used to seeing an earnings presentation, if we're being honest. So here is theirs. They issued a bunch of highlights to the quarter. Looks like that second quarter financial results. So I'm going to start on the third slide. Just some general highlights. They go through the main parts of the business. Link Media, 6% revenue growth, highlights of the broadband business, new fiber passing and subscribers, general indemnity, the insurance business, which has been surprisingly impressive lately, progress on the asset management business, $10.8 million distributed back to the company, the investment in Sky Harbor, which a lot of that's just accounting stuff, equity method income and unrealized loss. I don't really care about the accounting methods. I care about what their shares and warrants are worth right now. So we'll get into that in just a minute. And finally, the expenses related to the departure of Alex Rozek, who was the company's co-CEO. Now it's just Adam Peterson. He was the one who made the decision that we're going to communicate better with investors and put out presentations like the one you're looking at right now. I thought the separation costs were a little bit expensive. They paid him quite a bit to give up his super voting Class B shares, but that's neither here nor there. That's the past. Let's focus on the future with this presentation. So go through its business unit updates. This first slide in this has to do with Link Media, and I like that they're kind of breaking this down into segment by segment profitability metrics. Those have kind of been tough to find. You had to really dig through the quarterly financials to find them. Now they're really easy to find. We know that the revenue grew by about 6% year over year. That was listed in the highlights. One kind of key thing to notice is net income, the line down here. So far this year, Link Media has generated 38% more net income, that's bottom line profit, in this division than it generated in the first half of last year. So this is a profitable business. It's important for people to realize Link Media is profitable. It's not a giant revenue generator or a cash flow generator at this point, but it's definitely going in the right direction. So they're continuing to focus on cost reduction and things like that, which is really what they should be doing. Most of their billboard faces, you can see right here, 7,600 billboard faces. Only about 100 of them are digital. So these are the static, the big cardboard billboards that you see on the side of the road. And the biggest advantage of those is that they're cheap. They are cheap to maintain. They're cheap to, on an ongoing cost basis. So the margins on these should be huge. That's what they're focusing on. And if you look, they are. The gross margin here is 65% on year to date on the company's billboards. And I'd like to see that continue to improve, which it looks like it will, if they keep focusing on efficiency like they're doing. Next is the broadband, and they actually break this into two slides. So first is Boston Omaha Broadband's. These are like their wholly owned broadband subsidiaries, Airbeam, InfoWest, and Utah Broadband, that they got through acquisitions, and that are continuing to grow. And broadband's really interesting because Boston Omaha, and Adam Peterson had told me this on a recent earnings call. We really dug into this. That this is kind of like a delayed fuse, if you will. Like, they invest money in building out their fiber networks and their passings and things like that, and it's not really visible in the cash flow for some time. And what he was telling me is that 2025-ish is when we're really going to see some of these assets start to cash flow. But for now, $18.9 million of revenue year to date in this part of the broadband segment. So a pretty good part of the business. For context, the billboards were a little over 22 million on the previous slide. The gross margins of the broadband business are fantastic. 79% gross margin year to date. That's been pretty consistent since they started this part of the business. No net income. So again, we really want to see the cash flow start to come through on these, which should happen in the next year or two. But that's where we are right now. On an adjusted EBITDA basis, this is a profitable business, but the CapEx is very high. $11.5 million of CapEx for a sub $19 million revenue generating business. That's where the money's going. That's why Boston Omaha is not a very cash flow generating business yet. It's the broadband investment. It's this CapEx that they're putting in. The other part of the broadband business is the fiber fast homes. These are the installations in new homes. I love this part of the business. I wish it could be a bigger part of the business, but there are finite opportunities here. These are fiber networks that are installed at the time of construction with the idea that this is an HOA provided expense. So people buy their homes, they have broadband internet already there that's paid as part of their HOA fee. It creates a great, like a guaranteed revenue stream, if you will. So far, CapEx way outweighs the revenue it's generating. This is almost a pre-revenue business. It's generating just a little bit, $600,000 of revenue so far this year, from 2,300 fiber subscribers is not a ton of money. Like they have a backlog of 12,000 fiber passings. They already have 6,300 fiber passings there as of the second quarter. That's more than double a year ago, so that's pretty nice. Negative gross margin. This business is a money loser right now. Again, $600,000 of revenue in year to date. It's lost, $3.4 million, $4.2 million in capital expenditures. So this is really what I was talking about with the delayed fuse. You're really seeing it in the numbers here. So I'm really curious to see what this looks like in 2025. Now that we have a nice slideshow that breaks everything down very easily, I'm really excited to read these as we go on. General indemnity, the insurance business. This has been to me anyway, this has been probably the biggest positive surprise of Boston Omaha of the past 2 years. Everything else has been a negative surprise, if I'm being totally honest. The Alex Rosick leaving and the costs associated with that, the employee compensation that has been just excessive with bonuses that is being reined in now. The wind down and kind of failure of Boston Omaha Asset Management to gain any kind of traction. This is the positive that in my mind, this is the biggest positive. The insurance business kind of, for a while there, it was billboards, broadband, and then insurance was like a very distant third. It's really starting to narrow the gap. You see revenue is up so far for the year, 28% year over year in the first half. Gross written premium up 46% in the first half. The loss ratio is that's an impressive loss ratio for an insurance business. This is a high gross margin insurance business. It is profitable in terms of operating income, net income, adjusted EBITDA, all three of those big metrics, and the profits are growing significantly. So this is a profitable business, and it hopefully will continue to grow. And this is when I first invested in Boston Omaha years ago, right after their IPO. This was the part of the business I was the most excited about that never really took off because they were putting all their energy into billboards and broadband. I'm really excited to see them devote some more energy to insurance. Surety insurance is a highly profitable form of insurance when it's done well, and that loss ratio tells me they're doing it correctly. So I am excited to see where this part of the business goes in particular. But just to get through the rest of the slides, their investments, again, GAAP value is just what the value it's carried at on the balance sheet, not what it's actually worth. You can see the Sky Harbor investment in particular. The market value as of the end of the second quarter was $124.6 million. It's carried on the balance sheet as 91.8. Another reason why the company says book value is not a great measure of what it's actually worth. The other businesses are really tougher to value because they are not publicly traded companies. Um, but things like the built for rent fund should be fairly accurate. CB&T is really Crescent Bank is a tough one to value, but is a pretty significant investment for Boston Omaha. And just to kind of go through this last slide, the company is kind of cash poor right now. Uh, this will hopefully change as the Boston Omaha asset management wind down goes on. That should free up some more cash. And I want them to free up some more cash, not necessarily to invest in their existing businesses right now, but because they just did a $20 million share repurchase authorization that I would love to see them start buying back stock. Um, Adam Peterson has told me, he's told investors, the stock is worth a lot more than it's trading for right now. This gives the company a chance. All the insiders have bought shares, but on a company level, this gives them the chance to really put money where their mouth is. So I'd love to see them really be able to take advantage of the buyback. I think they will. I think they're going to, do it as much as is responsible, especially like I said, as the asset management business winds down and money starts coming in. So I would love to see that. I'd love to hear your thoughts. Again, this is not my overall opinion on Boston Omaha. I think there have been some missteps, and right now for them, they're still very much in show me mode, and that's not where I'm at as an investor. I want them to show me some results. Yeah, you could tell me that your billboard business is generating more revenue. You can tell me that the broadband business is going to cash flow in 2025. Show me some results. I want to see some bottom line earnings. I want to see this cash balance go up every quarter without asset sales. I want to see that, it be a self-sustaining, combination of three excellent businesses that we were sold when we started investing in this stock years ago. So that's kind of where I stand. This is a very encouraging step in the right direction. This level of communication with shareholders, very nice to see. Love to hear what you think. Leave me any questions you might have, and thanks for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.